Good morning, it's Talking Bull. I'm Steve O'Hare and it's Thursday, the 23rd of March. It's 8 o'clock in the morning UK time. Nice and early. We're going to go through the normal, we're going to dive into the headlines, give you an idea of what's gone on over the last 24 hours and what's coming up later. Also going to dive into the technicals. Please reach out on the chats. Let me know if you want me to take a look at your markets that you're interested in. I'm going to run through them. As normal, start with cryptos, then we're going to go into commodities, look at FX. Joe's not here, so I'll do the FX as well, and also look at indices before we dive into the Talking Bull. And let's see if we can make sense of what's going on. Okay. Yeah, news headlines. What is going on? Federal Reserve, as expected, increased rates by 25 basis points, now at 5%. This was in line with consensus forecasts and the vote was unanimous. There was a shift in the statement with the committee considering that rate hikes may be needed as opposed to comments at last time that it was anticipated the ongoing rate hikes would be appropriate. So potential for further rate hikes going forward. In the latest projections on interest rates, the dot plots forecast rates at 5.1% this year, unchanged from the previous estimate. 2024 forecast was raised slightly to 4.3% from 4.1%, but the committee still expects that rates will decline next year. Chairman Powell reiterated that the baseline scenario was for no rate cut this year, but there was speculation that rates had, there was fresh speculation that rates had peaked. Powell remained uneasy over the inflation outlook, especially as there had been no progress in reducing core inflation outside the housing sector. And he reiterated there was still a long way to go in the process of getting inflation back to 2%. Seems long way off now. According to Powell, recent banking events might result in tighter credit conditions, which would have an impact on the economy and how the Fed responds. Powell also indicated that credit conditions will be an important element and in principle can be seen as equivalent to a rate hike, and that monetary policy will have less work to do. There were gains in US Treasuries after the Fed decision and Powell's press conference, with stronger expectation that rates would could have peaked. The 2-year yield declined to below 3.9, with a 10-year yield around 3.45 on Thursday. The shift in Fed guidance and decline in yields was important in undermining dollar support. After a 6-week slide, after a slide to 6-week lows, the dollar index recovered as equities dipped sharply, but there was renewed selling this morning with the index testing 6-week lows. Again, we'll take a look at the dollar index and give you an idea on the technical side where there may be some form of support for that dollar index. Bank of England today, that'll announce its latest decision later, although bank economists are split. Markets are pricing a 100% chance of a further rate hike to 4.25%. That's a quarter of a point rate hike, or 25 basis point rate hike to 4.25. Forward guidance from the bank will be an important element for the markets. And finally, consensus forecasts offer a further increase of 50 basis points by the Swiss National Bank to 1.5%. So they're the main headlines we're grabbing today. Let's take a look at what we can see in the on the technical picture on the charts. We'll start with Bitcoin as normal. Obviously, as I said, please reach out. If you can only hear audio, please refresh your screen or refresh your browser, and hopefully you'll see the images as well that we're talking about. So Bitcoin has stalled at just in front of real big resistance levels. We actually managed a spike up towards that 28,800 level. The high yesterday on this chart, 28,936, before a reversal and a bearish engulfing candle reversal at that. We've almost engulfed the previous 3 candles. However, this morning we've had a bit of a rally. That seemed to react really to the prospects of further rate rises from the Fed. And we saw Bitcoin sell off on the back of that, despite the dollar weakness. So really reacting to the Fed comments. Let's take a look at the shorter term timeframes on Bitcoin. As you can see on the 4-hour chart, a bearish outside candle formed from the 4 o'clock candle yesterday. And since basically 8 o'clock last night, we've seen a tentative rally. Looks like a bit of a Maribuzo candle from that 4-hour candle. So we should be seeing some resistance coming in around about current levels or just above 27,825. Below, we've got support just in front of where we stalled yesterday, 26,500. I imagine we'll find some support there, and then all the way down to 25,250 as well from the previous peaks that we got in February. That is Bitcoin. Ethereum, we're back down to, or we did get back down to that 1730 level. 1730 in Ethereum is a pivotal level, and it's provided us with a low and a high on multiple occasions. And when we do break through it, we tend to get an extension. So we have stalled around about the 1840 to 1850 level on 3 occasions on the 4-hour chart. And we've now got the potential for a double or triple top on that. We really need a clear break below that 1725 level or 1730 level and a close below there. We did get that from the 4 o'clock to 8 o'clock candle yesterday, but it didn't manage to sustain it. I mean, on a daily candle, we really need to get that break. But on the 4-hour candle, that really is priming itself for a double top formation. So maybe the sign of things petering out on the crypto side of things. XRP had the explosive rally on Tuesday, went from 37 cents all the way up to 50 cents before retracing. Got back down to 41 cents yesterday, which was quite a key level, a previous swing high, which we failed to break above. And we reacted higher from there. So a little bit of a bounce since that 8 o'clock candle yesterday. That's crypto. Let's take a look now at our commodities. Obviously, we dive into gold first. Let's look at the daily chart. I've been referred to as golden balls this week after 2 gun-to-head trade ideas. Sometimes it works. Let me tell you, not all the time. Do sort of manage your expectations, but sometimes it does work. So gold managed to get up to $2,010, broke that $2,000 level, which was really nice to see that sort of like retest that psychological resistance. And since then, we've broke, that was last week. Since then that was Monday. Since then we've broken back down, and we have been under pressure all week. 1935, another key level that we've seen react from, where prices react from over the week. We saw a nice bounce from there, and we've stalled just in front of resistance at 1985. 1985 was the high from the 21st of March. But looking quite positive, especially with this dollar breaking down. So the dollar index wasn't looking too clever anyway. We can see that sort of the extension lower on the daily chart. We were at those lows, prices we haven't seen since the 3rd of Feb. And the next real support level that we've got on the charts is just here. This will be key because that's just in front of the 100 level. If you go back, we can see that price action previously had stalled at the 101.30 level. So that band of support down there should do a job at least, or do a test on the willingness of sellers to continue further. That 100 level looking very ominous at the moment with the weakness in dollar as well. That will give us a bit of a measure move target from these highs, the peaks where we peaked out 105.60, extending down from there by about 5 points. So gold, let's finish off gold. Let's look at the short-term charts on gold. The 4-hour chart, really nice. We're looking at an ABC, potential ABC correction. So is this the B leg? Has it topped out at this 1985 level? Definitely want to watch today. Potential for that to sort of like top out and move lower according to Elliott wave. Now, if we're looking at the dollar, if dollar does continue this grind lower, then there may be a bit of a different story here. We've still got that safe haven element to gold, but also with the dollar weakening, that will support price action. So I wouldn't step in front of this just yet. I'd much rather wait until we get up to retest that $2,010 level. If I did fancy shorting this market, right in the middle for me, 1977, yeah, not really sort of like any clear indication which way we'd go. If we really sort of like focus on the last few candles, 4-hour candle, that's a hanging man candle. Makes me a bit nervous on potential for upside, and we're reversing with a shooting star candle on this 4-hour time frame, which goes from 5 o'clock to 9 o'clock. So we've only got 50 minutes left. So maybe a small top there for a retracement back down, but it doesn't feel like it the way the dollar's acting at the moment. Silver, we saw that explode above the $23 level yesterday. Again, you can see these hanging man candles looking a bit ominous on the 4-hour chart. So short term, have we done it enough in silver? Also, from a daily perspective, let's take a look at the daily chart on here. We've seen a nice retracement higher. That stalled, or it has stalled just above the 61.8% fib at 23.12, and so there's a few a plethora of resistance levels around this area, and really pulling back from there. But again, dollar denominated precious metal, so keep an eye on the dollar when you're looking at this. Copper has had a move back higher as well. Let's get a nice little trend line going there. Potential for resistance coming in at $4.12. Really nice progress higher. 1, 2, 3, 4, 5. Fifth positive day of price action. You can see there'll be plenty of resistance at these levels, but definitely on the front foot at the moment with copper. Crude oil, the reaction high yesterday, we had oil inventories out. That lent a positive spin to crude oil. There's a lot going on in the oil space at the moment. We've seen Russia selling record amounts of diesel to Saudi Arabia, and it feels like Russia, although the sanctions are on Russia's oil, they seem to be shipping it out through the back door via numerous states. So that's keeping a cap on prices because they're selling it at a discount as well. So yeah, lots of competition in that space, but we've had a nice reaction over the last few days from 64.40 back up to 71.20, and we seem to have stalled around where the previous major support was. That was at 70.30. It's a level we talked about for a long while, where we drew sort of upward trending support lines from, and we had the spike lower early in December last year. We managed to break down below there, and we formed a bit of a shooting star candle there. So there is a potential for this reactive rally to be running out of steam. Also, taking a look at the 4-hour chart, we have run into resistance. Although we've got this underlying image of maybe an inverse head and shoulders forming, again, that 4-hour candle makes me a little bit nervous. The shooting star candle in the Ichimoku cloud resistance. So really sort of going to really test the resolve of the bears in the market today. That potentially a gun to head trade idea, because there's good risk reward on that. If it does fail here, plenty of room on the downside with quite a tight stop, allowing good risk reward. Brent crude oil, similar sort of price action. Obviously, we've had the rally higher, nice shooting star candle between 4 o'clock and 8 o'clock yesterday on the 4-hour chart, into that resistance on the short-term charts. And yeah, looking at the 75.67 swing high, doing a little bit of a job here, slowing this rally down. But still a bit of a few hours to test out really what's going on there. Natural gas remains under pressure. We have bounced from that 226 level back up now to 235 with a bullish hammer forming. So looks a little bit more supportive on the natural gas side of things. And right, okay, let's take a look at what markets you want to look at. We will look at FTSE in a short while. You want to look at FTSE 250, of course, we'll look at that. Thank you, Lee, Golden Boy. We can look at CAD yen and Euro New Zealand dollar. We will. Let's cover off the majors and then dive into that. And also we'll take, thank you, Marco, for your nice comments from the gun to head trade idea. It's nice when these work, but do remember our win rate is 45%. So we've had 2 winners. Work out the percentages. Doesn't happen often, but I'll do my best today. I'm really not sure what to go for. I'll have to think. I'll leave gold on the sidelines today. Forex. Let's take a look at Forex. Let's look at them. Obviously, dollar index. We said we'd look at this, and we're in an ABC correction lower. This seems to be extending lower, and could this turn into an impulsive move lower? With this being the first leg lower, corrective wave, and the third leg. Still got a lot to do on here. Let's take a look at where we sit on the weekly charts, because these are the major levels. And January's low that we eked out was 100.82, and we seem to be heading that way as well. So there's the support below, and it's not really far away even on a weekly basis. Daily chart, no sign of it stalling. Really aggressive move to the downside. This looks like this dollar weakness is going to continue. Is the shorter term chart warning us of anything? Not really. Even the hourly chart, maybe a couple of bullish hammers, but that seems to be not a lot really to support the markets at the moment. But it's a positive candle. Well, you know, let's go for it. An hourly positive candle in dollars. So maybe we'll have a little bit of a slowdown in this sell-off. How does that impact on euro dollar? Well, let's look at the daily charts. Let's let the dogs wander about the house. They'll be back. They'll want to know what my gun to head trade idea is. Euro dollar has had a really good week, obviously based on how the dollar's sold off. This has been really good. We're back up to that shooting star candle that we posted the week of the 30th of Jan, and so we're running into a little bit of a resistance area currently. 50% retracement of that original down move. So there is a number of Fibonacci and horizontal levels to watch here. Really sort of like, let me highlight these levels here. That this seems to have, this 109.33 seems to have done a job. That's where we've stalled just in front of that today, but we're not far away from it. We'll be testing that, don't worry. And yeah, the swing high from this shooting star candle actually was 110.33, so that's another cent higher. Looking at the 4-hour chart, nice ABC correction completed, and the extension higher now taking place. So nice aggressive move over the last 48 hours on this chart. So looking pretty positive, although we're getting that little sign of stalling, that little sign of dollar turning. Cable, take a look at cable. Let's get some levels out of this. We've topped out today at 123.43. We do have that resistance band above between 124 and 124.35. That would be the level for me to really sort of like focus in on this chart. A nice corrective bounce in this range that we've been trading. Well, we could say we've been trading it, if we take it right back to these levels, since mid-November. So yeah, that's definitely getting towards the upper end of that range. So the bears will be having their beady eyes on this one as we approach them resistance levels. Also, take a look at dollar yen. I was looking for an inverse head and shoulders formation on this. It played out, but it didn't really do a great job. It didn't hit any real targets. From a double bottom perspective, that would have worked. Nice extension higher from there. And then we ran into an evening doji star formation, which then led to the dollar sell-off, or that we saw the dollar sell-off from there. It didn't necessarily lead the way, the dollar yen, but posting a bullish hammer currently on the day after reacting from this 139 level, which is a previous reaction level. So that's looking slightly positive on the dollar side of things as we go into the European session. So let's take a look at the funky markets that you're asking me to look at. CAD yen. Right, I'll dive into, don't know what's going on in this market, dive into the weekly chart. We can see we've got decent support just below. We've stalled this week in front of that support coming in at 94.63. And yeah, it does look like this is like, if we look at an Elliott wave perspective, this is maybe the third leg, reactive fourth leg correction, and looking for this fifth leg extension. But we've got to break that support, and that will be a test. So next support after, if we do get a break of that 94.63, 93.02, I'd be focused on CAD yen. So mildly bearish on the weekly chart, but we do have this support below. Nice bullish hammer posted on the 19th of Jan, and that indecisive candle from Monday really has that put a little bit of a stall on this sell-off. Looking at like a slightly positive start today, with the reaction from the lows at 95.45. Looking at the 4-hour chart, we've still got decent resistance up above, and yeah, playing out. Looks like we've completed an ABC correction on CAD yen. Have we posted a higher low as well? So if you look at this and squint really hard, you know you'll find one of my favorite formations in here, this inverse head and shoulders formation. Initially, I'll look really at the resistance level for me is this 97.12. That would be for me a neckline for this double bottom formation. I know this candle didn't get down to the previous swing low, but it doesn't need to. It's stalled in front of it, so that's even stronger. Shows signs of willingness to for buyers in this market. But yeah, so that's what I'll be looking at. A nice little corrective bounce now would play out nicely, and then retest that 97.12. So a little bit of a positive swing over the short term for CAD yen, although more medium term still looks a little bit bearish to me. That's CAD yen. Euro, New Zealand dollar, we'll take a look at. I love all these exotic markets, we'll call them. They're not the normal standard pairs that we look at all the time, so it is good to look at them. Right, looks like we're in a bit of a rally here. We've had a really good week on Euro, New Zealand dollar. We're engulfing, or we have engulfed currently, all of last week's losses. So we had a nice little move up. Last week's sell-off was pretty aggressive, with Euro taking a hit, but this week Euro's bounced back, strength continued, and we are getting towards some serious resistance levels. So nice little channel higher here, but these are the levels to watch, which we're approaching. Let's get multiple touch points on this horizontal trend line. 1, 2, 3. That's coming in at 175.33. Now, this morning, well, yesterday's candle was a hanging man candle, so that's a little bit of a concern. We're stalling in front of these resistance levels, and today we've already engulfed yesterday's price action, or yesterday's body of the candle, not the whole price action. Support will be yesterday's low around about the 173.02 level. Take that away, and what we got, yeah, we have stalled in front of these major resistance levels. So for me, there's a slight inkling, although we're in a bullish trend, there's a slight inkling of a stall in the market. And excuse me. And on the Elliott wave theory, we've got these impulsive move highs look to have topped out at that just now at these 174.60 level, looking for a correction lower. So really focused on this neckline 173.02, and a break down below there would set up a nice double top formation for me. Let's give a measured move of that double top formation. 171.45. That would be the measured move target if we do manage to break and close below that 173.02. So yeah, bullish medium term, and but we looks like we've topped out on Euro, New Zealand dollar. That's what I can see. I hope that helps. And yeah, let's dive into the indices and take a look at. We'll look at the FTSE 100 first, and then dive down a little bit into the FTSE 250, which has been requested. So looking at indices, we had yesterday price action stalled after a nice week so far. We were engulfing almost to up to last Wednesday, and then stalled, topped out yesterday, and reversed slightly. So a bit of pressure, obviously, with after that Fed meeting, a bit of pressure on the indices. The thought of higher rates. Also, I think the Fed talking about the banking sector and saying that not all banking deposits would be safe. Don't panic, that came out wrong. Not all banks will be safe. I think your deposits are safe up to a certain amount, so they say. But there was a headline that I spotted this morning and it was post-Fed strength in markets was somewhat undermined by comments from Janet Yellen about the US not planning to insure all uninsured bank deposits. So your uninsured bank deposits, which would be the amounts of money above your insured deposit, wouldn't necessarily be covered. So be careful of that. If you've got millions and millions, spread it out. Let's take a look. Yeah, FTSE. So bearish on FTSE yesterday, sort of topped out. The rally stalled. Take a look at the 4-hour chart. We didn't manage to break above the Ichimoku cloud. Did complete an ABC correction on the 4-hour chart according to Elliott Wave, but we have had a bearish outside candle. That's a 5 o'clock to 9 o'clock candle yesterday, and although we've had a little bit of a rally before market open this morning, we seem to have run into resistance again. So FTSE has stalled in this reaction rally. Also looking at, oh no, FTSE 250. That's the one we want to look at. We're not interested in anything else because someone's requested it. So the weekly chart looks pretty positive, as does the FTSE 100. I think this market maybe only trades during the normal trading hours of the markets. Nice reaction rally higher, and maybe we haven't seen the pullback yet that we've seen on the FTSE 100. So if you look at this as a weekly candle, you'd think that was quite a constructive candle. We managed to get down below the 22,076 support. We opened below it, but we filled the gap and we've carried on the extension higher. Now, how does this look on a daily chart? On the daily chart, we've seen this reactive candle, and then we opened up a lot higher, leaving that gap on the chart from a daily perspective. On Tuesday and Wednesday, price action has been overall pretty positive. We had that head and shoulders formation that seemed to play out pretty nicely, hitting the sort of measured move target on that last Friday. So didn't even remember we drew that, but yeah, that was one to watch. But that seems to have hit the target, so that's all right. And let's look at the 4-hour chart. So price action obviously hasn't opened up. I'd expect this to open lower. Based on what's gone on in the markets. This closed yesterday before the Fed, I think, if I'm not wrong. So yeah, that gap on the chart, expect that to be filled, and I suppose remains slightly under pressure. The hourly charts don't give us a lot of don't give us a lot. It looks like looks like a Heikin-Ashi chart. Actually, these are sort of like quite good charts to sort of like really give you a little bit more color from the Heikin-Ashi charts. It joins up the gaps, so and it really sort of picks out the trend. You can see that this is like could this be more of a larger head and shoulders formation? Potentially, yes, where we've got the left shoulder neckline, head, right shoulder neckline, right shoulder we're looking for now around about the 23,558 maybe, and then but really the level to watch would be a break below that 22,200 level. That would be the one I'd be concerned about. But yeah, at the moment we're above there, so don't panic, Mr. Mannering. Hope that helps. That's the hourly chart. So yeah, they're pretty pretty fun charts. The DAX is having a little bit of a recovery as we've been speaking, or since we've come on air. Looking as overall today, we've had a little bit of a positive reaction after yesterday's sell-off into the close. Trading at 15,187, resistance up at 15,300. That was yesterday's high, and support really in the form of yesterday's low. So they're the levels I'd watch: 15,300 down to 15,070. 4-hour chart, we're above the Ichimoku cloud, but we're just traded back above it. So really trying hard to remain positive on this. As I say, price action at supportive levels with this cloud, but you know, we really need to see how price continues to play out on this. I think it's a bit of a flip of a coin on indices today, but overall, got to think about the rate rises we're expecting in the UK and Swiss National Bank today. So should be quite an exciting day. Let's take a look at the Dow. Bearish outside candle yesterday, very aggressive move to the downside. A little bit of life in it this morning, but really we'll be focusing on this support at 32,014. Any sort of like sign of weakness, or we could see a aggressive reversal in the indices. But I think I talked about that at the start of the week and it didn't happen. We just take a little bit of a sip of coffee just in case I'm missing any comments. No, we're not. So yeah, shooting star candle on the Nasdaq again at resistance levels. So that's a nice reaction. That opens up. You know what I'm like. As soon as I see a little bit of weakness in the indices, I jump straight on it and try and get that panic sell-off move. S&P is down below the 4,000 level, and again a nice bearish outside candle on there. Let's look at the short-term charts. Yeah, they're looking pretty negative to me also. So are we getting the first signs of a little bit of a trend? 4-hour charts just bounced off the supportive cloud, so really shouldn't be touching it, but I might be forced into that. Let's take a look at see the Heikin Ashi charts. They take the time element out of the markets. So this is how you'd see it. Pretty interesting charts. They all look the same. So you know, when I say Heikin Ashi, it's more of a Heikin Ashi chart rather than a Heikin Ashi hourly chart or a daily chart or whatever. But yeah, that looks pretty. But this reactive rally looks to have topped out at that 38.2% fib retracement level. Let me see if we can get a decent fib to look at. 50% we stalled at. So yeah, and then the reaction lower. So looking desperately to try and break this cycle of these negative candles at the moment. So watch out and see how that plays out over the next hour. I've got 30 minutes left on that. It looks already to be stalling. So what else are we looking at? We've looked at everything that we have. We've covered everything on the requests. Now we go to that time of the day where we look at the gun to head. So this is normally the part of the show where myself and Joe, we take a look at the markets and we pick a trade idea as though we had a gun to head. So we almost force ourselves to put a trade idea on. Now this is the way how not to trade. You shouldn't really be forcing a trade, but it's what we do. And we sort of, we've tried this for a few years, really enjoyed it. We had a theoretical track record. This year, we've actually gone that step and opened up an account, put £2,000 in it. That's quite close to the average. It's slightly above the average of what a retail trader would put in his account, according to our sources anyway. So £2,000 does sort of like give you, fills you with a few, it can be problematic, to be honest, because sometimes you can't actually trade them small amounts that you'd want to trade if you want to stick to a percentage of risk against reward. For this, we focus on a real 2-to-1 risk reward, or better than 2-to-1. We've got lots and lots of trade ideas that we've given over the years. We sort of know where our strengths are. Myself, my strike rate is below 50%, but my average risk reward is 2.25 to 1 on the trades that I have, we have sort of like triggered over the years in the thousands of trade ideas we've done. So we have to pick the stop and target on the chart, and we'll publish it as well. We've done that. We did it yesterday. Let's see if we can. Let's see if we can. Obviously, I want to show you this because it's a winner chicken dinner. We'll go to the ideas from yesterday. And this was my trade idea from yesterday. We had, I managed to pick a trade idea from the day before, preempting the break in this potential a head and shoulders formation, which it did play out nicely. The measured move target was 1924. It didn't get down there, but it did have a nice little sell-off. So that worked out quite nicely for the first trade idea. Then yesterday we stalled at, on the markets, we stalled at 1935.36, which was a support level. And we looked like we could be forming a potential double bottom. We had a bullish hammer candle posted as well when we were live on it yesterday. Then as we played out, we can see that everything went my way after that. Well, we had a little bit of a pullback, a little bit of a flirt with the stop. The stop was at 1933.68. We got down to, we pulled back 1937.25 around there before we had a little bit of a move higher. And just before the Fed, it went into profit, and the Fed assisted me along the way. And that was really what I was looking for, that Fed hitting the, coming out with exactly what they're expected to do, which I thought would lend strength to gold with dollar weakness. So that's what we did. So that's it. I can't rely on that now. I've done that. Now this is our account. We're above the watermark, 2036.50. We've been doing this since 1st of Jan or start of the year, and we're in profit. So I haven't been in profit very often. If you can't see my screen, Mark, please refresh your browser, and you should hopefully see it. There are sometimes issues, so please refresh your browser. No, you're all right. I wasn't showing you the screen. Silly me. So let me just bring that up. So the trade idea from yesterday. This was the one from yesterday. Thanks, Mark, for notifying me of that. Normally I've got Joe saying, show the screen, Steve. So this was it, the head and shoulders formation, breakdown lower, and then we saw potential for a double bottom. So a lot of the times you'd wait for the neckline to break before you get involved, but we've got a gun to head, so we just got to play it. And then it just reacted higher, so played out really nicely, and got some nice comments. Excellent call, Shire. I think that's a compliment as well. So I'm not sure. So that's what we've done. And yeah, let's move on. Stop waffling. This is our account. We're in the black. While Joe's away, obviously, I've been able to flex my muscles and haven't been held back by Joe. I hope you're well, Joe. I'm a gold prophet. I wouldn't go that far. Let's take a look at the indices now. I like to sort of sell indices, and there's a bit of a sort of topping like formation going on here. This is the Heikin-Ashi charts. Let's go back to what the yeah, for me, we could be sort of basically stalling. Maybe we've posted a lower high here and getting a reversal. So I'm going to look to sell FTSE today. FTSE's always a very difficult market to trade. Well, I've always found it difficult. And yeah, I feel like we've topped out a little bit here. Really sort of looking for it to give up those gains again on the day. Remember, we've only got till 9 o'clock tonight. And yeah, I'm sort of thinking, have we got the head and shoulders here? I mean, if we do go up there, risk reward is a bit of a struggle to get decent risk reward out of this. I can't even put my stop above there. Or can we do EU 50? Struggling really, or maybe even S&Ps. Are we having this rally? Is this a false rally? Yeah, let's go S&Ps instead. We've got this sell-off from yesterday, spike higher after the Fed, and then the aggressive sell-off. Indices don't like it, and we'll stick with the Fed today. So we're down below that 4,000 level. That would be an ideal level to have my stop. We'll adjust the timing of this, and we'll say, what are we going to say? We've got this previous resistance level, then it acted as support level, and maybe we'll get some resistance coming in around there as well. We're trading at 39.66. Let's try and get a little bit more of an aggressive stop. That looks too aggressive to me. We'll use that 4,000 level as the stop level, and we'll look to target a move lower just back to this swing low here. This is giving us a 3-to-1 risk reward. Let's see what it gives us when we try and put the trade on. As I've said, it doesn't always give you what you want. So take profit, stop loss. We don't want to risk 13,000%. We'll risk 1%. How does that leave us? We can do 0.3 units. That is risking £19.14, which is slightly below 1%. So that's fine. I'm happy with that. We have to put the stop in. That stop is 39.96. We're risking £18.80. So that's fine. £19.2. It's jumping about. So and we're targeting a move. I'll leave it like that for some reason. Right, felt a bit nervous putting that on, but we're short 0.8 units on the S&P. The stop is risking £18.50. Target, looking at £60. That would be a humdinger. That would be nice. So got that on. You can see that trade short there. That's and we can see the sort of like transaction history as well. You can see yesterday the gold trade idea, which ended up in a £38.50 profit. So that's where we are today. Hope that helps. I'm sort of thinking that we could get that continuation of the bearishness from yesterday. Let me just take a look, make sure there's no other requests or comments. Looking at stream, upcoming. Yeah. So that all looks good. Anyway, it looks good to me. What have we got left? Well, we've got we're basically looking at the Swiss National Bank. That decision's already out. Question from Marco: how would the Bank of England's rate decision affect the UK index? Well, interest rates are obviously sort of important to manage inflation, and we're looking at we're expecting a quarter point interest rate rise today, so we're expecting it to say 4.25. That's what we're looking for. Everyone's expecting it, 100% expecting it. Not everyone wants it necessarily, because people think these aggressive interest rate rises could impact on future as well. It does impact on companies, especially ones with net borrowing. The FTSE has got the banks in there, so that that can be impacted in two ways. The FTSE sort of like rising interest rates are good for banks; they make more money, so it could potentially be a good thing for the FTSE, taking that into account. So thanks for the question, Marco. So yeah, if we say, for instance, it's really more of whether it's a surprise or not, or the commentary that comes from the Bank of England after the interest rate decision. We won't know that commentary. It's embargoed until a certain time, 12 o'clock, I think it is UK, and then we'll find out. So it's not just the rate decision, which is 100% expected. It's maybe the comments that come out about the future rise of interest rates, or what we're expecting in the future. So yeah, other companies are impacted, especially companies that have a lot of debt. They're impacted negatively by a higher interest rate. So it could, but the banks are in the FTSE. So think about that. It's a bit of a mixed bag. That's why it's so difficult to trade the FTSE. I've always found it to be a difficult one. So Swiss National Bank already out. I could try and have a look for it, but I haven't really got the time. I've already spent 45 minutes on this. Oh my God, you must be bored. Bank of England policy decision. There it is, 12 o'clock. 12:30 US jobless claims, and March 24th, tomorrow, global PMI data. That'll be interesting. Bank of England policy decision. That's today. So sorry, that's not a key event over the next week. That's happening today. So thanks for joining me today, guys. I hope it's been informative. I hope you've enjoyed it. Please leave feedback. Let us know what you want to see. And yeah, look forward to seeing you tomorrow. Cheers.